So let us talk about what are the investments we should do it in 20s. So the today's agenda I have divided into three parts. One is why somebody should invest when they're young. It's very important to know uh, why somebody should invest, because most of the time when we have young and we have a lot of time with us, we know it's a power of compounding is to be great. We have long term, we have low tax bracket. Most of us may be staying with the parents, so your surplus incomes are high, but sometimes we don't know where to invest, or we are not sure what to choose. So most of the time when I was talking about, and I this is the one of the presentation I do quite often, not in this, that it's not the money, it's a behavior make people investments growth. Okay, so I have sometimes my parents are very old, so I go to the hospital and I have seen so many people, the nurse and all this stuff, they must be getting so less money, but their investment surplus is so high, and the people who was earning in crores also, they have none of the investments. So it is behavior science more than money, because first thing when I speak with somebody, the answer comes that no, my salary is so low, or my income is low and my expenses are high. So the definition of income versus expense is in our mind, and how we have to take care more than we don't have money to invest. So we are blessed that we all are having a money and able to invest. Second question, I'm going to drive it, where to invest. Very important. What you should choose, how you should choose, how to invest is the next question. I'm going to do it across. So what are the questions in your mind most of the time? These questions I have written as I keep getting from that, and it's a very nice. You won't believe when any of my customers tell, okay, please speak with my kids, or maybe my niece, nephews, or anybody. I feel very happy about it. It's not the quantum of the investment, but when they are young, they are coming forward to learn for the investment. That's the best part of it, because I personally have started investment from the age of 21 itself, when I start first my salary. And that's what my dad told, that okay, you should invest every time whatever earn, irrespective of the money, 25% of your things. And I've been doing for last 26 years. So I always believe what I do, if I can do, anybody else can do. So same thing comes in your mind also. Most of the time we will just see our expenses are high, incomes are low, or we are not able to save and invest. Sometimes they say that okay, my friend is using an app and it's a very cool return, so they go with the herd mentality. Or you can say that they say whatever my friends, family, or somebody has told, it's nothing wrong in that, but I always believe you should have a decision, because it's good. The best part of all of you is you have a Google with you. You can try and ask anything whatever you want, but don't do what is good for your friend is also good for you. It is not sure always, because their risk level, their time of entry, the time of exit, and everything is very different. Third and foremost, what I keep getting is, this is for me, I don't know when somebody asks how to answer it, because when I ask, I take a session on a wealth management in mostly B schools. And when I'm telling them, okay, how to make sure that what is a long term, short term, or a medium term goals, or what are those long term or short term, the answers comes to me in a short term is only few months, and how to make double the money in 1 year or 2 years. So there is nothing called a quick fix. That's the one thing I have want all of you to learn. There is nothing called quick fix. Okay, somebody must have made double. I'm not saying it must have made it in even a few good tricks. Tricks, I mean to say that he has picked a very nice stock and which has gone very high and done it. But if you see the portfolio, you see the long term, nothing can make. So I was getting last few months back, not only last few months back, even yesterday I was going through in YouTube, and so many apps. I'm not saying they're right or wrong, because I don't do neither the what you call daily trading, or I don't do the trading at all. So they're saying, okay, learn in 7 days and make the double the money. I have done a double. And I sometimes people says, why don't you do the same kind of thing? So I said, no, I don't want to do. First of all, I always teach what I have done and I have achieved. So I'm assuming other person should do it. And if somebody is making the double the money, you can just think a simple mathematics. A person doesn't have to sell his YouTube for 4.99 and 7.99 or anything else. He must be next to the, according to me, Modi or Ambani or Adani. Because the reason is somebody is making in 7 to 1 month double the money, he will be, that's, so there is a what we call domino effect. So if you keep doubling 1 rupee every day, you will be a much more bigger than the person who's having 1 million. So the same thing, there is nothing called quick money. Quick money comes for short term. Look for a long term question. So these questions keeps coming. I will be keep answering. If you have many more questions, I have just tried to put it across. What are the most three questions comes? And my answers are always on those side is what is in your mind, so how you can make those into the investments and a goal. People who are more at 20s, it's a very nice, they are self independent with their good income. It can be as a freelancer, it can be as a salary, it can be anything. They are doing amazingly well. So they wanted to do higher studies. Higher studies need not to be a master's, maybe master's, but it can be any skill. Like one of my friend's son is wanted to do a CFA. Okay, and CFA is a part-time kind of thing. You can do it, and which is costing around 2 lakhs odd plus. So you wanted to save money for your higher studies, you wanted to do a long term investment and successfully retirement, you wanted to start your own company, and you says, okay, to start my own company I should have a minimum income of maybe 50,000 a month. So I should do that and then start off. And this is the most question asked by my customers. So whoever, I take customer only by reference. So any customer who come to me and speak that, Rachna, I am going to get retired and I want an alternative income because none of us are going to get pension. And everybody comes and tell me, Rachna, why you didn't meet me before? I lost the power of compounding. I lost the time when I am supposed to invest. I didn't invest. So now I have only 10 years to investment and my retirement is 30 years. The best part for all of you in this session going to be, or you're going to tell others, is talk about you have the best inner thing which most of us don't have is the time. Is time is with you. So even when you are in 20s, you start with 8 10,000 rupees, it will take you to 5 and 10 crores. And that's the power of compounding which we are going to learn. Second thing is you all are having a low tax. So you and most of the time when you're having a low tax, your surplus income increase. So it is a good way to start more investment whenever you have. Try to take care of, if your parents are dependent, how to secure them, especially on a health cover side, because you must, we all have seen in a COVID time, it was really difficult if we don't have a good health cover. Have and maintain the good lifestyle. This is the one thing I wanted to stress on, a good lifestyle. Okay. The lifestyle is the how you have been and brought up, how you have continued to do it, is that lifestyle to continue. So it doesn't matter, okay, I got it very good a hike. So let me change my laptop, my mobile to 1.5 lakhs, and I get a car of 40 50 lakhs. So when you change your lifestyle, most of the time we are not able to achieve the goals. Lifestyle, I always say it's very good to have your own passion and achieve the passion. If you love to have a high end car, please save for it and have high end and feel reward to yourself. But don't do a lifestyle what a person because your neighbor is having or somebody of your friends are having, or because I saw the Facebook or a reel or my things. Those are very, to me, of course I'm not on social media, but I'm trying to say it's a very, to me it's a fake level, because they are your good friends only on a good time. I have a very live example on those. I have a daughter of 21 and son of 15. So I keep hearing this things from there. And 3 weeks back, there one of her friend was not well and he was admitted. And I asked her, and they have a three roommates. So I said, how are they? Because parents are in Dubai, they are not able to come. How to take care of it? She was telling, Mama, I am feeling so sad because not even one single friend came to stay with him in the hospital. Neither the anybody came to give the food or anything else. So she, with her another friend, tried to manage 4 days in our admission to give the food and stay one overnight and all. So I keep telling her the same thing. This is the time you all should learn who is your good friend and who is your social friend who keeps giving you thumbs up or the heart in your Insta reels to say that you are good, and when you're partying, you come. So, good lifestyle is where you manage your lifestyle without a frill of it until unless you're rewarding when the money comes. So, that's a very, very important part of it. You do what you like to do, you're not doing what others want you to do. So, this is the best part. I love this. How to make money work for you. Actually, it's very, very easy how to make a money works for you. So sometimes we have to give a time to the, like we says, money is like a tree. So we are making a tree grows big. We are putting a seed and a manure and a water and the sunlight. It grows up itself, and then it start giving a flowers, and it every year it gives you the fruit. The same concept work here, the same thing. So how to budget? Most of us, and in when you are in the best of your lifespan, you like to go out, you like to spend, you like to do lot many things. There is nothing wrong in doing things, but budget it. You may say that I may wanted to go one rally, maybe to I'm just giving example, Ladakh or Kashmir or wherever it is, but I will go when I save the money and do that. You can say that if I'm going out with my friend, my dinner party should not go more than 1,000 to 1,500. Give a boundary lines to yourself, give the budget to yourself. Sometimes when we don't give this, we go out of bond, and then you will start borrowing with a friend. Okay, you pay for me, I will pay you later. And this circle of borrowing goes on and on and on. So I remembered in the college when somebody will take money from me, and when I ask, okay, can you give me back money? He will ask second, he'll ask third, fourth, fifth, and then it'll go on, and then they'll say, okay, we'll give you later. Not only in the college, this I saw recently one of our friend's daughter. She was explaining me, Auntie, you don't know there is a app saying that you can borrow the salary in advance. And I was very shocked. I said, why you need a salary in advance? So it's telling, no, no, we spend the salary much earlier. By 15, my salary get over and all the stuff. So I'll take a salary in advance. Then I told her, I think so something is a basic wrong in this. First of all, maybe it's a business idea. People have done great. But to me, if you cannot plan a 1 month for your salary, how you can plan for your long-term goals or achievement of your all the things? So please try to budget. That's a very important, and good thing is there are lot many budget apps are there. And when you have a budget apps, you will be able to write. You won't believe it. I used to write in diary, and I still write after 26 years, still my daily expense. I do write. And it's a, for me, I don't get a pie chart or any chart that where I spend, how much I spend, and all the stuff. But yes, I know where I have spent and if I've gone higher or lower and what I have done it. So similarly, when you write it, you know where you need to improve. So I'll give you example. My daughter used some budgeting app, and but then she was come to me and saying that I wanted to go in the sharing taxi, and I said, what happened? Then she says, no, my 45 or 50%, whatever percentage of the money extra is going only in the taxi. I said, wow, what is great learning. Then she says, yeah, because I have to save the money. And then she felt it that whatever you have sharing taxis are making much more longer time and not saving so much of money. Then they said, okay, fine, I will try to go closest to the metro and take an auto. And she was able to save around 20 to 30% more money. And that's a very good learning by itself. So I always believe you all are much smarter than all of us. I am not even aware of so many apps keeps coming and going. Budget is the one thing I want you to do it. Even if you're getting a pocket money, if you're getting a salary or you are earning, please make budgets. Don't take a debt. Try avoiding your debt. Debt is a loans. Okay. If you have a student loan, try to pay it off, because good thing is it is a tax efficient also for you. But other than that loan, please don't take. I have few friends, kids and all, when they come to me, and then a very young person around maybe 22 or 23, I am not sure the age, but very young, out of the college, having 11 lakhs of loan. And then he says, I don't know what to do. Then I ask, why the hell in such a young age you have taken a loan for? And then he said that I have taken a loan because my all friends and others were going for Leh Ladakh 1 month of rally in the bullet, or I don't know which vehicle he has purchased, which is around 7.5 lakhs and 4 lakhs for the full 1 month. And I was surprised. I'm not saying experience is not good, very nice when you have it. But sometimes you have to understand. And I told the same thing. You must have borrowed the vehicle, then have purchasing 7 to 8 lakhs rupees. Or you must have tried yourself to see how Airbnb and other things you must have saved, than taking a good, very good hotel or five-star hotels. So sometimes all those things, when you are budgeting, it's making you much more smarter, taking less debt and doing experience. But if I was in his place, I must have saved some money and then gone. There's nothing stopping in 1 or 2 years if I go later. Save and invest, that is the best part of it. And you won't believe, sooner or later you will have a multiple stream of income coming, because you have saved when you are young. So these are the benefits what we get it when you start early. You can take little higher risk. When you take a higher risk, you get a little higher returns. Then you have a power of compounding, which is very, very true, which I am taking across. You have a longer term to define and take care of it. It can be any goals. You have to make sure that you discipline yourself, because starting, if you discipline, it will work for a lifelong. And the last but not the least, you are in the lower tax bracket, so your surplus are high. I can say first few years you may be staying with your parents, so again you don't have to do a day-to-day expense of, I can say, a house or rent or taking care of the food items and all. So when your surplus are high, invest the faster. The very important part of our discipline is, this is my, I am coming from the army background. My dad was in army, so this is what I love it across, and that's what it's make it me happy to, that I have a good discipline. Successful investing take time and discipline and patience, very important part of it. No matter how great the talent and effort, something just take time. So you have to make sure that you have to give time. There is nothing wrong that you don't. So I have another example. Somebody told me that, Rachna, I have saw, and I'm sure you all must have heard also, last maybe 4 5 months back, there was a, it's like a waves comes, I have seen in investing. Everybody is trying to talk about crypto, 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 and I was the one person who was telling no crypto, no crypto, and all the stuff. It's not that I don't understand or I don't like it. First of all, being an advisor, we were not coming under the legal part of an advising. Second thing is, the concept was not clear, taxation was not clear. And whenever we always says that all the TV and Panwala started talking about it, better not to do it. It means that it has gone above the limit. So it is the same thing happened, and that guy has purchased 1 CR crypto, and he came to me 2 to 3 months back, said that it has become a 20 lakhs. Can I quit now? And I got so wild, and I said, when I told not to do, you have done it. So now it's better, yeah, now you continue. Either you average it out or you continue. You can't exit at minus 80%. So sometimes we should have a patience. Don't go with the herds. Most of us goes with the herd. My son, and the crypto worst part was there was no KYC or you have to be 18 or something. My son is 15 and he keep playing some games, I don't know. And that friend says, yeah, they're doubling the money in 3 weeks. So why don't you invest the money? And I was trying to say, my son, no, you don't have to do. There's nothing called doubling the money in 3 weeks and all. And he was trying to explain, Mama, you don't know anything and all. Amitabh Bachchan has taken, this person has taken, that person has taken, all have taken. So I told my husband, because he's putting his pocket money, it's a lifetime learning for him. So I'll not say no. And if I'm not wrong, he put 5,000 rupees and it is gone. So when I asked him what happened, so coincidentally, this is my job and I'm being part and parcel of this. So many crypto groups or crypto, and a lot of my friends are CEOs of those things. I keep telling him and everybody, there is nothing called quick money. Please try to understand. There's nothing called quick money. There is always a loophole which you don't know. So discipline is a very important part. I'm sure when we were going to school, you must have realized that reaching on school on time, your school bus comes on time, everything comes on time. Your otherwise they will say, okay, you are late comers, you do this punishment. Same thing with the office and your any of the business timelines. The goals have every discipline. Same thing, it comes across health or the sports. They always says that when somebody is doing so good, you are just looking the medal part of it, you are not looking the what he or she has taken care of, so much of effort to do that. The similarly in the gym, so if you do 1 or 2 days or 1 or 2 months, it doesn't impact. When you do continuously, it makes your healthy and make it much more better. So similarly, mind money also work the same. You have to be very disciplined, going across without fail, like a month on month investing, and just forget it, you will get a much more better part of it. Discipline, I always says, is the best part to continue. Most of people sometimes they start, but they forget that this is for a long term, and then they get it caught in a, I call a negative noise. The negative noise is like a people are saying, TV is saying, the social media is saying, you don't have to worry. I keep telling, why we are investing? We are investing for, let us say, I'm just giving example, you must be investing, you want to buy a car, you want to go for higher education, you wanted to maybe build a house or for your wedding, something very specific. If that does not come, why you are worried about what people are talking about? I never see my portfolio at all because I know it's for my retirement and kids' education. Nothing goal has come, so let me continue my investment. Simple as that. So that is the way you all have to look. The discipline is all about. So this is the another things people say. Getting rich is much easier, but staying rich is much tough. This is so many stories must have come. I have taken a story of Sushil Kumar, who was a teacher and who won the 5 crores in KBC 5, and he claims that that was turning life, which is the most miserable thing happened to him. So most of the time when you see these things, when people get rich, they do so many things which is not good, and that's made them very difficult. So I'm sure this thing, if you do it as on today in the Google also, you will find the story of his how it went down. The discipline is second thing is talks about. I'm sure all of you must be aware the a person is a A and B who was equally talented in cricket, but B went on 24 years and A disappeared. And this is the another things which I always felt, who is A and B, you will surprise to know, is because of their discipline. That's where they says that it makes much more easier for somebody to have a long-term discipline and continue the long. So I'll just give it a story. Please go ahead.
Chinese bamboo is the world's tallest grass, which goes up to as high as 80 to 90 feet in a little over 5 years. When you sow the seed and start watering and nurturing it daily, you don't see it growing for 5 years. It would be frustrating, isn't it? But wait, miracle happens after 5 years. It grows from 0 to 80 feet in less than 90 days. Similarly, growing wealth through SIP also requires a lot of patience. Had you started an SIP of rupees 10,000 in September 2010 in large cap fund, the value of your total investment of 3.6 lakh rupees would have been 3.57 lakh rupees after 3 years. Had you stopped an SIP, this temporary loss would have been permanent loss. But had you continued an SIP at the end of the 4th year, your value of total investment of 4.8 lakh rupees would have been 6.95 lakh rupees. And if your SIP still continues till March 2019, the value of total investment of rupees 10.3 lakhs would have been 17.38 lakh rupees. Remember, correction is temporary, growth is permanent. So continue your SIP for long term to create wealth. Mutual fund investment.
So this is the way I keep telling it, that you can become much wealthy or earning more money when you save, start early. That's a very thing. The power of compounding starts only when you stay long time, and you have the best thing is in your hand is a time. So that is what I was just trying to say. If you see, this is the guru for all the financial tech people. He started saving at age of 14. Okay, and you can see how his net worth and the money has grown. So till 53, 14 to 53, he was almost very low, which says that 3370 million. But as it grown, it has gone much more. So he himself has told, if I must have started investing from 14 years to 25th, instead of starting from 14, it will be 25th. 96% of Buffett's things came only after 50th birthday. And just he started age of 10, continued till 90, and not 90 billion, it will be 11.7 million. So 10 years or 11 years of difference of compounding is this much. So that is a very important how you utilize the power of compounding. I have already spoken this, so let me have a one power of compounding.
If you want to go around the earth and start with 100 meters on the first day and double the distance every day, how long do you think it will take? 1 year? 10 years? Let's find out. Within 19 days, you would have covered 39,321 kilometers, while the equatorial circumference of Earth is about 40,075 kilometers. You would have traveled around the world in less than 20 days. But what if you stopped after 10 days? You would have hardly covered a little less than 77 kilometers. This is the power of compounding. Power of compounding can help you to create a great wealth as well. How to leverage the power of compounding for maximum benefit? Start early and invest regularly. Nisha invests rupees 5,000 every month since the age of 25, while Nilesh invests rupees 7,000 every month since the age of 35. By the age of 60, both would have invested 21 lakh rupees. Assuming a return of 12%, Nisha will accumulate 2.75 crore rupees, while Nilesh will get only 1.19 crore rupees, which is 59% lesser than Nisha's wealth. This is why starting early is important. To create a wealth, start an SIP in equity mutual.
So this is what I was trying to explain you how the things comes. I will continue and I'll come back to the calculator after this. So this is the saving mantra. Most of us, what we do, we get money or income, we pay the bills and spend, and then whatever is left over, we save or invest. But the actual thing is, you should make sure 20 to 25% you save first, then spend is the best part of it. Take a smart decision, very important. Don't go with the herd mentality. If your friends, family, anybody is telling there's nothing wrong, they must be telling from their decision, their experience, and everybody is right in their own way. But is it their right decision is right for you? Who are them to tell you? Now, first thing is they are concerned about you, they love you, they are trying to tell best for that. But the right decision should come from you. Do the always a good analyzed person in a Google and write and do what is good for you. There's nothing wrong in asking help. Risk and returns very proportionate. Always tell that how to take care, asset allocate, diversified and long-term planning. Especially to start with, do the SIP. I can tell you that's what I have done it, and is easier way passive. You don't have to worry much about it. Don't go in too many tradings and other until unless you know about your trading and the market. It's better somebody else take the decision. So I always believe a lot of people comes, ma'am, I have taken this app, that app. So I said it is very good as long as you're investing, but make sure one thing, investing is not so important as when you exit. So most of the time, lot of time people will just say where to invest. They don't say when to exit. Exiting is making you profit or loss. It's not entry is making a profit or loss. So how long you are staying, which product you are doing, what is your asset allocation, how you are dividing into the different funds, viewing the funds. Please do that part of it and continue wherever you are doing. That's more important. High risk, high returns, we have to understand a basic fundamental is the things which is giving you high returns, not necessary is having a always, I can say, no risk kind of. A lot of time people says, no, this is giving me no risk, but giving me around 13%, 15% returns. I can bet you that things are underlying you are not aware of. But yes, if anybody is giving you returns more than 7% or 6.5%, now it is having some or other return. So most of the people didn't know before that, oh, FD also have a risk. So if the bank has done the NPA, which is non-performing asset, what may be the cost of your FDs? You are going to get only 5 lakhs. And that also, this has changed very recently, 3 years back. Previously, RBI will give you only 1 lakh. So similarly, everything do have some risk. The risk which doesn't come with anything is most of the time is government bonds. Government bonds yield is as of today 6.5 or 7. That is what I'm trying to say. The bond market is much bigger than the market, I can say stock market. And that's where the PF, PPF, insurance, everything's actually go and buy the bonds. So that's one of the reason. So what is the bond rate? You can just take it as a concept. That plus one minus is going to be your low risk product will be giving across. So if my as of today returns at 6.5, 7 in the bonds, so 7% if somebody is giving you the returns are good, which is not having a much risk. Equity is always having a risk. You can take equity as a Sensex or the Nifty, large cap, mid cap, small cap. They all have a different things. If I'm taking as a large cap on a 20 years, 30 years return perspective, it's around 12 to 14% returns. So 14% return year on year is a good returns. Then you can easily do the weighted average and say how is the medium risk going to be. So small and mid cap may go around 16 to 18. But I feel as a good portfolio, you should look, which is a good combination of debt, equity, hybrid, and all, should be around 12 to 14% returns year on year. The easiest formula you have to think about is post tax, post inflation should be zero for a longest term. That should be the reason you should look across. Long term planning, every season is not a harvest. There is a season of watering, planting, pulling the weeds, and fertilizing. That's the one thing you have to realize part of it. So, this is what is a long term Anil has thought. He is a CEO and founder of Right Horizons. He is a author of Honey, I Lost All My Money, which is giving us small stories how to learn around it. So, think about what is your goal. It is a similarly when you're going from one destination to another, I'm sure you must have taken a Google map and seen, okay, I wanted to go to XYZ place and what are the distance wise, how much time it is taking, what are the different route it is, and the same concept works for your financial goals also. This is the, I can say, gamut of all the investment, which is called fixed returns, and non-fixed means variable or non-variable, or you can say market and non-market, anything. So fixed returns are the investment where you know your returns in advance. Like if you go to the bank, they will say that FDs are at 6% for 365 days or 366 days, or for 6 months it is 4.5. So they will tell you in advance. But non-fixed is variable. The reason is when you're buying, you don't know the what returns you may get. They may give you the past returns, but you don't know what you are going to get. You will know only the day of selling. Okay, that is a return a variable. That's why that is, it can be insurance in a ULIP, which invest in the stocks, real estate when you take a house, plot, or flat. When you sell it, that time you will know how much returns you have got. You have a commodities, copper, silver, and all. Gold is there nowadays, physical gold or mutual fund gold, ETFs. Equity is the one thing which is very, very good, but you must have seen that it has its own ups and downs. So you should always invest in equity only when you're looking more than 5 to 7 years. Don't do in equities less than 5 to 7 years, because equity cycle goes normally in the cycle of 8 to 9 years, which we can say bull and bear. Just giving a brief about yourself is like a 1992, it was a Harshad Mehta scam which went down, and 2000 it was a dot-com bust. Then 2008 was Lehman Brothers, a financial crisis. 2019, 20 onwards, it is a COVID. So the days you can name miss change, but always 8 or 9 years you will see up and downs. Both the cycles works across. So you should always do equity, go very good. We assume that this decade is the best decade for India, which is having a multi-bull run. Invest, you will have a very, very good return, keeping in a 3 to 5 years plus only. This is the last video before I end and take the questions.
In a multilingual country like India, cricket is a common language 1.3 billion people speak. But do you know, this most revered sport in India has many similarities with investments. Let us have a look. Can you imagine a team of only batsmen? Never, right? We need a perfect blend of batsmen, bowlers and fielders to win the match. Similarly, to succeed in the game of investment, diversification is the only winning strategy. Just like a balanced team, we need a balanced portfolio to give us better returns. We can't hit the boundary on every delivery. Singles are just as important as boundaries. Similarly, we should invest in debt and equity. Equity provides us high returns when the market is good, and debt provides us consistent returns when the market is tight. Interesting, isn't it? Based on time, there are 3 different formats of cricket, and we select players based on their track record for each format. Similarly, we have different investment horizons. Whether short or long term, we must select funds according to our goals only. Lastly, just like a captain is necessary to lead the team, similarly, we should have a professional to lead and.
So I have already spoken about goal, time, and risk. I just spoke about how to do the time horizons and appetite. 3 steps to do. It's very easy. I'm assuming you should have your PAN card, you should have your Aadhaar, make your what is the investment objective and the needs. Choose the right mutual fund. You can choose any of your apps. The best part of the youngster, I love it because they are very, very good in finding all the apps and the different options. Okay. Make sure they are transparent, they are doing what is right, and take a good mix of, maybe you can say, if you are going for equity, first try to do a tax saving for you. So ELSS, do part of large and multi-cap or balance funds. Then you should be able to look in a higher risk funds. So it's an easier 3 process, and it automatically goes from your bank. You don't have to worry about it. This is what I was trying to say. It is so easy when you're in 20s. You just started with 8,500. Amount invested is only 40 lakhs, but you are going to get 10 crores. That is what it is talk about. Investing resolution, try to see that you do a continuous in SIPs, Make sure that you have a long-term goals. Take care of a security of your parents and a good health cover and the term cover, which is very, very, very important. Identify your long, short, and mid-term goals. Start SIP for the tax and long term. Secure the health and the term cover for families. Make sure minimum invest 20% of take home. Look your portfolio, not more often. I think so it'll burn your heart more than anything else. I always say it's good to see once in 6 months. One girl came to me, she's around 23, and she says, Auntie, I watch my portfolio 6 to 7 times in a day. And I was telling, if you're watching 6 times a day, is it going to change anything? Neither. Actually, she was doing a mutual fund. So mutual fund anyway also comes by end of a day only. Then I was telling what you are going to do it. No, it makes me feel happy and makes me feel sad. And I said, please don't feel sad yourself. You feel happy that your investments are growing and feel that you are doing a passive. When you're doing an SIP for a long term, you don't have to see every day and feel about until unless you are passionate about the market or something, then you should do it. With this, I surrender and I'll have question and answers from your end. Thank you.
Yeah, thank you, ma'am. So I think we have one question in Q&A section, that is, uh, how to identify and invest in Sharia compliant stocks. Can we get any guidance in this regard?
There are many people, fund managers who have actually I know PMS for Sharia compliant, and there are people who can tell you which doesn't take the interest and other things I know. If you want, I can ask my research team to come back to you. I know PMSs are there, but for the stock level, I have to find from them and get back to you.
I think
same question it is. Yeah.
I would request participants to post their questions in Q&A section if you're having any queries.
When there is a class and there is no questions, I assume that everybody has understood, and I personally feel it's a wonderful thing. If there is no questions, I just want you to have a wonderful time and a weekend. Happy Navratri, and start sharing your happiness with others. Yeah, there's a questions.
Yeah, ma'am, I think we got 2-3 questions. I will read it out. The first question is that which mutual funds are good in SIP for income of 30K?
Income of 30K or investment for 30K?
Ma'am, it's income of 30K.
So if it is 30K, I will just say you take it around 20% of investment is around 6,000. 6,000 you divide it into 3 parts, into the 2,000 each. One you take it as a multi-cap fund, one is balanced fund, and one is a large cap fund. We assume as of today that mid and small may not be doing good in the next few years. So these 3 are good to have a combination. I have a term insurance of 25 lakhs. Can I increase the amount, and what should be the right amount for the term insurance? So term insurance normally have a different views. It's called in a CFP we used to have it like a income based, expense based, or a goal based. But to just give a thumb rule, people normally says, okay, you take whatever is your salary 20 times, 30 times. That's another way. Another way is to make sure that if in case you have a debt, it should take care of your debt and all the goals for your family. That's a way normally do it. But I nowadays feel when we are young, the good thing is in term cover, it goes till life. They don't change the premium. So when you are young, take a good term cover around 1 crore and all, which will help you out in the long term. How to diversify the small cap and large cap? Normally, small and mid can be 30% of your portfolio. That's the way you should go. Yeah, Anupam, can you ask him to unmute, Anupam? Can you unmute and speak, Anupam?
Yeah. Mr. Anupam, please.
Okay, I just unmuted. Yeah, hi, Rachna.
Hi,
That was a
hi,
very
Rima.
wonderful session,
Thank
especially
you.
for the youngsters. So I usually feel this, that I think financial investments is one of the most important things. We miss out this lesson in our younger days.
Yeah.
And by the time we are 30, 35, when you start seeing grays on your head, that's where you start worrying, right? So I think I got a couple of my friends' children and my kids and all to be a part of it. One quick question on
Yes,
this.
yes, yeah.
So with regards to the shares, there's a lot of information around it. In the Panwala can sit and give you an advice. Ye upar ja raha hai, ye niche ja raha hai, go for it. The kids themselves discuss. So I have seen my staff also discuss in terms of 90 days के लिए पैसा जमा कर देते हैं, 180 days के लिए पैसा जमा कर देते हैं. We get some interest amount, small monies that they keep getting. But since our discussion was today was about compounding our money
Funding.
and about mutual funds, what are those 1, 2, 3 things that a person should be able to identify while they decide to invest into those kind of SIPs or those kind of mutual funds? Which shares we just know, we read some balance sheet, or we may just see a general, discussion about it. But what are those 1, 2, 3 points that anyone who wants to go for those MFs, apart from tax saving, of course, that's one of the initial years, that was our only criteria. So if these are tax saving mutual funds, we put money in that because that was saving our tax. But at our age now there's nothing like tax saving anymore because we are already in that bracket which we are paying more than 30%.
More than 30%.
And more than that also, so many times paying double. But that's irrelevant now. If we need to understand on the mutual fund, can you give that pointer, which is a good mutual fund? How do you identify?
See, Anupama, I have another sessions normally come across where schemes always change. The schemes which is, I can say topper today, after 3 years, they may be in the bottom 5 or bottom 10 also. Okay. So just looking the most of the people who does the mutual fund, I can say selection is either the past returns or the ranking. Okay. It can be from value research or a money control or the Morningstar. What I believe is most of the time I tell divide whatever it is into 5 part your mutual fund. So if you have a 10,000 rupees, 2,000 into 5 mutual fund. One is large, one is mid and small, one is balance fund, and one is debt fund, and one is multi-fund. So these are the funds you have to do a divide. I never take a sectorial funds because sectoral funds are very, very high risk. If you're not exiting, you may lose even 50% of it. Okay. So as a nature by person, personally what I do the same thing for my customer. I don't take much risk. Okay. So that's why I don't do trade. Even Right Horizon, we don't do trades anyway. We do only through PMS. So we take care of those 5 and look only returns 5 years and above first level. So most of the time people will look around, I can say, I look beta. Beta is the reason where we will see how much risk they have taken, a standard deviation. These 3 things, if you are looking across, you will find, I am 100% sure, if in a long term, they will give you more than 12 to 14% returns.
Great. Okay. Thanks for that, Rachna.
Yeah. Yeah, Harshni?
I think Harshni was first.
Hello, ma'am. Can you hear me?
Yes, I can. Please tell me.
Yeah, can you repeat those 5 funds that you have said? Large, mid.
One is large cap fund.
Okay.
One is multi-cap means it will take care of all the funds. It can be taking from large, it will take from mid, it will take care of from small. Multi is from any cap wise, multi-fund. Balance, it's a hybrid funds nowadays. Hybrid funds is as per the PB, they keep changing debt and equity ratio. It's called hybrid fund or balance fund. Third, okay. Fourth is small and mid.
Okay,
and fifth I take as a debt funds, because debt funds are always used for 2 reasons. One is for a contingency sometime if required, and second thing is if the market is low, you can move it and switch it to the equity side.
Okay. Okay, thank you, ma'am.
Welcome.
We got some questions in Q&A section.
Yeah,
we'll read out. So the first question is, will you please throw some light on P2P investment? Is that come under regulatory reporting?
As of today, P2P is not a regular part as per RBI, but RBI has allowed those portals. Okay. So the portal level, the regulation has come, so people can buy and search. Before, I can say, people used to say it is that Sindhi loan or the Marwadi loan. There's the same kind of loan, but at least you know whom you're paying and what is their credit score. That's what they are trying to do. But I have seen people who have lose a lot of money in P2P also. Only thing is how this portal does it. They just try to see your CIBIL ratings and all, and before they give it.
Okay. So the next question is, as liquid fund not giving much return, what is alternative available for liquid?
Now, if you start looking, the liquid funds will start giving good because the rates has gone high. On an average, liquid debt funds and other things, ultra short funds normally gives around 6% returns. Last few years, it is not given. But if you're looking and asking me instead of liquid, you wanted where to park it, parking has to be in a debt funds. But if you want a debt funds in a long run, please go and buy the bonds. This is the best time to have a debt as a bonds. Bonds are giving around 7 to 7.5 AA plus. Very rarely you will find those bonds at so high rates for a 10 years plus. So please do that.